good afternoon to all of you who just joined this very interesting panel. I hope it will be very interesting. The topic of the discussion today will be how different investor types could support the microfinance sector development and bring it beyond current achievements. And to go through this discussion, I have the pleasure to have two highly experienced speakers involved in the microfinance sector for a number of years. And I would like to let them introduce themselves. So we have today with us Elisabeth Bolreich from Women's World Banking, and I hope I pronounce your last name properly, Elisabeth. Maybe you can introduce yourself in a couple of minutes.
Sure. Thank you so much, Olivier, and hello everyone. Pleasure to be here. Yeah, my name is Elisabeth Bolreich. I'm one of the principal investment officers with Women's World Banking Asset Management, which is a subsidiary of Women's World Banking, a global NGO. And we at the Asset Management, we manage 2 private equity funds where we invest in inclusive financial service providers with the specific goal to increase financial inclusion for women. But I'm happy to tell you a little bit more about that shortly.
Thank you very much, Elisabeth. And together with us, we also have Christina Reif-Schneider, who represents Baobab, the Baobab Group. Christina, could you present yourself very quickly?
Yes, sure. Thank you, Olivier. So my name is Christina Reif-Schneider. I'm the Group CFO of Baobab Group. Baobab Group is a microfinance group mostly focused on the African continent, and I will present the group in more detail a bit later, and I'm happy to join this panel.
Thank you very much, Christina. Myself, Olivier Dolman, so I'm working at the European Investment Bank. I'm in charge of the microfinance activities of EIB, and these activities are focused outside the EU in mostly Africa, the MENA region, and the Caribbean, where we provide both debt and equity products, equity via funds, and also technical assistance. I'm very happy to have the chance to moderate this panel today. Basically, let me move the slides to the next one. So basically what brings us all together today was the willingness to talk about what we should or could do next in the microfinance area. I think we all agree that if we look backwards 20 or 30 years ago, the evolution of the microfinance sector is tremendous. What has been achieved by microfinance institutions, but also all the funders supporting the sector, all the stakeholders involved in microfinance, all these, let's say, microfinance team have achieved great results. And now we can say that to a large extent, we have a number of MFIs in a number of countries that became bigger, stronger, and more resilient. And I think we can look backward, and I think it's quite an achievement to see what has been done over that period of time. But of course, at the same time, we have to recognize, or we have to realize that financial exclusion still persists, and financial inclusion is what brings us together, and our common objective is to help people to get a job and be able to run a business for those who are unbanked or have a difficult access to finance. So that's what brings us together. And many people do not have this opportunity yet in a number of countries. There might be many reasons behind this, but one of them might be that with the evolution of the microfinance sector, more and more MFIs have become stronger, but at the same time have to comply with a number of requirements, which may reduce their capacity to take more risk and serve the most vulnerable people. So what we would like to talk about today is what different types of investors could do to help the sector move to the next stage and support even more the microfinance sector and more vulnerable people to get access to finance. So that's what we would like to discuss together with you, and we will briefly touch upon potential solutions to achieve this goal. But I think what we want to talk about is also how different types of investors. On one hand, we have Women's World Banking presenting a very interesting way of combining different types of investors from public donors like the EU and private investors or DFIs like EIB. And on the other hand, Christina will explain where the gaps are, what they would like to do from Baobab to support even more access to finance. And I guess she will also tell us what they need to achieve this. How can they do to go a step beyond and support more people to get access to finance? I will try to answer some questions or put some ideas on the table, but I think we would be very interested to hear from the audience what your views are on this topic. So the idea is now that I will leave the floor to Elizabeth and then Christina. And afterwards, I suggest that we have an open Q&A and discuss about your views and ideas on this topic. So if you have questions, let's please go through the presentations. And afterwards, if you have questions, please raise your hands or put a comment in the chat box, and we'll discuss and try to answer your questions. So I propose that now I leave the floor to Elizabeth, who will make a presentation on Women's World Banking and their latest fund that was closed not so recently anymore. Please, Elizabeth, the floor is yours.
Great. Thank you so much, Olivier. And just to give you a little bit of background of where we are coming from, and I think the story of Women's World Banking is very aligned with what you have just laid out, how the microfinance industry has evolved. So we at Women's World Banking, we're focused on the largest group of underserved, the underserved population, which is women. We know that 1 billion women today still lack access to a basic bank account. And with that, they don't only have a secure place to save their funds, but they also lack access to basic financial products and services, such as loans, insurance products, pension products that really help them thrive and their families thrive. So this is where we see a big opportunity for social impact by focusing on this segment, but also a big business opportunity for companies to start serving this underserved segment. So Women's World Banking has been working for more than 40 years now in women's financial inclusion, and really has helped this industry evolve, has evolved with this industry. So by at the beginning, as you know, microfinance was very focused on traditional group lending models. We helped a lot of institutions evolve from group lending to individual lending, and as regulations allowed, introduce savings products, insurance products, and lately more and more also digital financial products and services to serve especially the underserved women segment. But what we also saw is as the industry evolved and a lot of institutions transformed from non-profit to for-profit institutions, we saw a big drop in the percentage of women clients served, and also a big drop of percentage of women staff and management. And that was a big concern, of course, for an institution like ours. And that's where we decided we do not only need to be a grant and technical assistance provider, we also need to be on the shareholding table, on the board of directors for these institutions to make sure that they stay true to the mission, focus on the women's segment, stay gender diverse internally, while at the same time showing that they can be financially successful and profitable doing that. So that is really the idea behind us being also an investor, a private equity investor in this segment. So to date, we have 2 funds under management. We invest in high-performing, innovative financial service providers globally, with the specific focus to help them increase their how they serve women, reach more women, and also become more gender diverse internally to reach women's empowerment. So yeah, specifically talking about our second fund, and Olivier, thanks if you can go to the next slide. What's unique about our second fund is that we use a blended finance structure. So what it means is that we have different types of tranches in our fund to bring together different players. And actually the impetus of this and our anchor investor is the European Union. So funds specifically from the European Commission that are targeted towards financial inclusion for women, specifically in sub-Saharan Africa, but with the goal also to attract more funding from different type of players for this segment. So that's why we have what we call a Class E first loss equity tranche from the European Union, but also the German government, the BMZ in USAID, that supports the fund structure with the goal to bring more players into this space that otherwise might not invest in this space. We also have important support from EIB, KfW, JICA, so some of the important DFIs, but also private investors such as Soros Economic Development Fund, as well as family foundations, high net worth individuals to support the fund. And our target is to bring more private investors into this space by creating a risk return profile that works for them through this unique structure that we have in the fund. Furthermore, this also allows us, with this first loss piece that we received from the European Union and the BMZ especially, to invest in institutions that others sometimes wouldn't invest in, because either it's considered, a market that is considered risky, a low-income country where there's certain currency risks that you might not want to take, or it's an earlier stage company that a lot of more institutional investors do not want to invest in. And so this unique structure really allows us to go beyond what a lot of private equity funds can do. And last but not least, what's important, that the funds that we received from the European Union and the BMZ also came with a separate technical assistance type of funding. So that is outside of the regular structure of the fund. It is a separate pool of funds that's grant funded, which we can use to not only invest in the form of equity into institutions, but also provide technical support, capacity building for these institutions in order to help them identify where are the opportunities to serve more women clients, what are the types of products and services that these women clients need, and also how can they attract the best female talent in the market to the organizations as staff and as management. And I think that has been a real game changer for us, that we do not only invest, and we're not only a private equity investor, so we primarily invest in the form of equity, but that as an investor, we can also provide this additional value add to these institutions, that we say, we actually help you achieve those goals that we all want to achieve, and help you grow, therefore, in a very sustainable way by reaching this specific target segment. And that makes us as an investor actually more attractive to a lot of institutions and provides more value add. And in the end, we see also it provides more social returns as well as financial returns for our investors. So I'm happy, of course, to tell you more about that if there are any questions. But in terms of the question, so what is needed for the future? I think, first of all, we need to get more funding into the space from different types of players. And I think what's especially important to get some of the bigger institutional private investors into this space. And I think blended finance structures are one way to start doing this by helping to show them, okay, we can improve the risk return profile and therefore show this can be a very profitable strategy for a private investor. But there also, we do still see some hurdles. We do still see that this is new for a lot of private investors. They're not used to this type of structure. Sometimes they have difficulties putting it into their traditional asset categories. So there's a lot of education still needed. And there's also some of them are not ready yet to take that step. There's still the track record is still early for the whole industry. And a lot of them don't want to write smaller ticket sizes. So they're still looking for for the big funds where they can deploy a lot of money. So there's still a lot of work to be done, but I think it's an important step that players like also the European Union, EIB, take to help attract this type of funding. And the other area is certainly, I think, blending the investment with additional capacity building, with technical support, is critical to help the organizations we invest in achieve the goals that we want them to achieve. But let me stop here and hand it over to Christina, but I'm very happy to answer any questions later on.
Thank you very much, Elizabeth. I was looking for the unmute button, of course. Thank you very much. Very interesting. I must say, what I keep as a summary of what you said, and what is very interesting is the dedication of Women's World Banking to support one of the most excluded group of people, which are women, and obviously a very important group in the world. And more you will see, at least from DFIs like EIB, but the other ones, that we will put more focus on these dedicated investments. That will become more and more important. We will want to support more investments that are addressing really those people who need support. This is true for women. It can be true for other excluded groups. And I think what is also very interesting from the fund is that it's not only about money, it's also about, and probably even more about advice and real involvement in the companies that you support. And it is probably one of the best way to ensure that MFIs will focus their attention to women and other groups that are unserved. And by doing so, it's not only, as I said, money, it's really advice and involvement and support that you provide by being in the boards or by providing technical assistance to these institutions. So many thanks for the presentation. I will now hand over to Christina. So Christina, the floor is yours.
All right, thank you. And thank you, Elizabeth, for this super interesting presentation. It makes me feel quite encouraged to see the, let's say, the many good things that that you are describing are part of this particular fund. And I think I will get back to some of the things you mentioned already, also in my, let's say, wish list from an operational or let's say practical point of view as an MFI. So I just wanted to give a very brief overview of what Baobab Group is actually doing. Baobab Group is active in 9 different geographies in China and in 8 countries on the African continent that you see here on the map. We are having around 1.2 million clients and a loan book of around 660 million euros as per end of last year. But I think it's very important to mention that we are really a classic microfinance provider with an average loan amount of 3,300 euros. We are doing a little bit of SME funding as well, but our maximum loan amount is 200,000 euros, and that is, let's say, yeah, contracts that are really very rare in our portfolio. So I think we are really the classic microfinance provider organized in a group structure with the head offices sitting in Paris. If we move on to the next slide, I put a couple of, let's say, yeah, key factors that we see as very important in the next future, and where we believe that various investor types will hopefully, yeah, play an important role to support us, to support the microfinance industry and us as a, I think, classical representative. I tried to somehow cluster it in those 4 different sections, which is develop digitalization, then take risk, of course, third point, ensure solid funding, and last but not least, also develop the regulatory frameworks in the countries of operations. And I don't want to go through all the individual items that I listed here with the bullet points, but on the right side, I tried to somehow illustrate whom we see in a good position to support on the various subjects that we consider to be relevant. And maybe if I just start with this first item, develop digitalization there, I think we heard it already before, also in Elizabeth's presentation on the, let's say, support that Women's World Bank was giving to various institutions, that lately there is more focus on everything which is, let's say, digital, mostly talking about various new product types for clients, different new channels to reach clients, but also looking at the back office of institutions to work on, let's say, embracing technology in a let's say more professional way in order to increase operational efficiency, and thereby also, let's say, create new room to work on interest rates, for example, by just becoming, let's say, cheaper in the sense of having less cost of operations per se by a branch network, for example. And in this area, obviously, a lot of investment is needed on the side of the MFIs, and as sure as everybody is that this will pay off at some point, it still creates some sort of a stretch to find let's say the appropriate support for such investments, being it in terms of finding the right type of funding, finding it at a rate that is sustainable, but also finding, let's say, the proper advice on how to work in this area. And there, I think we are again also back at the subject of technical assistance that was mentioned before, where especially the IFIs and DFIs typically provide or can provide quite some support along with funding lines that they're offered. And I think that this is really the next or the current big topic for MFIs to work in this area. And I believe without the dedicated support of IFIs and DFIs, it is difficult for most MFIs to really achieve something meaningful in that area. I also put as a, let's say, nice to have donor organizations, which I mean are not really investors in the pure sense of the word, but still obviously there can also be quite some benefit from let's say real donors engaging themselves in this area. Then the next section, take risk, is, I would say, the more classic turf where investors are let's say also working on since quite a long time, with the, let's say, the front runners obviously being again IFIs and DFIs, but also certain impact investors on equity and debt side are quite active in this area. And I think this is something which we appreciate as microfinance institutions quite a lot. Especially when it comes to risk sharing tools. I think, Olivier, you mentioned portfolio guarantees already as such a tool. Here, I think this is really the classic, let's say, way of exploring new client groups, which are still a bit difficult to assess in terms of risk assessment, and which are potentially also coming with the, let's say, the classic issues of not having any registered collateral, not having for example, long-standing track record of operations that they want to get funded, etc. And there it can obviously greatly help if there is some sort of risk sharing in place, either via some structure with first loss pieces on total portfolios of such client groups, or also on a case-by-case basis to, for example, cover, I don't know, 10-20% of a loss per client in a dedicated portfolio of a dedicated client group. And these let's say, instruments are very much supporting us in, let's say, trying to increase our reach out to client groups which we were not used to working with before. And I think a classic example is here agricultural sector, especially in very rural areas. But for example, the segment of young entrepreneurs is also a quite interesting segment here, which we would like to fund, but where we find it very difficult to take the risk alone. And one other thing which I think is also important to mention here in this respect is that it is extremely helpful if investors are coming with really balanced return expectations. And I found it quite interesting what you mentioned before, that let's say the migration from not-for-profit into for-profit organizations was also coming with a, let's say, reduced focus on inclusion of women, because I'm not saying that there is a direct link between return expectations and exclusion of women, but sometimes there is, let's say, a certain pressure on financial inclusion when return expectations are becoming too high. So therefore, let's say a balanced view from the investor side, and also somehow a patient investor can make quite a difference in this respect. Then the next item, the ensure solid funding, obviously a classic when we talk about investors for MFIs. I think I would like to pick one of the items that we see here, which is subordinated loans, which we are, for example, looking for in various jurisdictions. And there is potentially an interest of, let's say, more commercial investors or impact investors. But what we see is that it really greatly helps if a DFI or a, let's say, very dedicated impact investor is playing a role as a market maker, being somehow, yeah, the first entity to start having such a contract with us, and that creates then, let's say, confidence or higher comfort for, let's say, less impact-driven investors to also walk into that direction. And I think this is also very much what you explained before with the fund structure of this Capital Partners 2 fund that you presented, where it's really, let's say, a pull factor in a way to have, let's say, one entity which is really, yeah, taking the role as the biggest risk taker, taking the first loss piece, and thereby creating confidence for more risk adverse and less impact driven counterparties to also put money, and thereby then obviously significantly increasing the market overall. So I think that here really very, very obviously impact investors have a very strongly driven impact investors have a very important role to play. But first of all, IFIs, DFIs are paving the way here. And the last item that I still, let's say, put on my slide, even though it's not, let's say, a real investor topic only, is the regulatory frameworks in our countries of operations. I mean, for China, that's maybe a more difficult topic, but at least on the African continent, we see that there is still a lot of, let's say, not international best practice oriented regulation in various countries, and this is sometimes really making it difficult to operate. And the more there is, let's say, a good dialogue with especially IFIs on the country level, on the institutional level in the various countries, let's say, the better the macroeconomic environment in terms of regulation gets. And this is obviously also strongly supporting the work of us as an MFI. And while most of these items that are now mentioned are not dedicated to, let's say, individual vulnerable groups or very particular client groups that I mentioned, I think that overall the strength of an MFI, or the let's say, institutional possibilities that the MFI has, are, let's say, the key trigger point to increase outreach, to include more new client groups, and thereby to increase access to finance. I think I would stop here, and would very much look forward to getting comments and questions now.
Thank you very much, Christina. And I think we are spot on the key question. because you state a number of needs that could support the development of the microfinance sector. And the question mark is who can provide it. And I think, as you show in the slide, different types of investors have a role to play to provide these funding resources. Not all of them have the same capacity, and I can talk for ourselves, for EIB. In this list, there are things that we can provide, certainly, and others that require the involvement of either public donors. The European Union is typically one of them. Private donors can play a role, as we've seen also in the case of the Women's World Banking Fund. So it's really a team effort. I can say for EIB, we have to operate on more, what I would say, market terms. So there are types of risks that we can't take, and this is true with some exceptions. Sometimes we have dedicated mandates, but typically we have to operate at market terms. What we do, though, is to be present early in the process, and we try to be there among the firsts. And I found interesting what you were saying about subordinated loans and the need to have market maker or institutions, which can be DFIs, but potentially funds as well that could be funded by DFIs, but who would be basically the first ones to open the door and crowd in, and that's what we try to achieve from the EIB, is to crowd in the private sector. So basically provide a signaling effect that can bring additional investors into the deal. And the subordinated loan is a good example. There could be other ones. I mean, funds is a typical example too. I think we've seen it. Yeah, I will not go through all the points you've raised, but I think they're all relevant. I would say, from my personal view, to put one additional element to this, let's say, list of needs. There is one that I still see missing in the financial inclusion world, which is the access to insurance for all clients of MFIs. To me, I mean, it is developing, and it's true that you see more and more, at least health insurance. But I think this makes a lot of sense and should grow. Climate insurance will be the next big step, I think. I mean, we know in which world we live. The future might not be bright with regards to the impact of climate on the life of people. And I believe that the development of a strong macro insurance sector with a climate insurance solution would provide resilience to these events. And it's easy to say it. To make it work is another story, and it's going to be very complex. But I think this is worth working on this, and it will require the involvement of many different types of investors. Of course, insurance companies, but DFIs might have to help, and as you said, provide a signaling effect. But the MFIs will have to also to envisage and consider that option, to offer that such a solution to their clients, to make them more resilient vis-a-vis these events. Yeah, so I will maybe stop here and suggest to open the Q&A. I saw that there was a question in the chat box from Patricia Richter. Patricia, do you want to? So the question is basically, and I hope I'm raising it properly. But the question is basically about the ticket size in the funds, and if I understand well, the idea is that they are too big, or looking for big investments, but small investments would be needed. I hope I summarize your question properly. Maybe I will ask this or raise this question to Elizabeth. I don't know if you have anything to say, or you want to say something on this question, but indeed it's a relevant one to. I mean, we don't need only the big tickets, but we need also small investments, which has an impact on the return expectations.
Yeah, no, exactly, and it really speaks to some of the challenges that I also mentioned, to bring in the institutional investors, so specifically like the pension funds and so on, where there is huge pools of money, but in order to get them to invest into emerging markets, more socially focused operations that do have also attractive return potential, the size of the minimum ticket that they want to write, which is sometimes the 50 to 100 million minimum, because otherwise they say it doesn't make sense for them, is very difficult in this sector, which is typically still smaller funds to attract and deploy. So it's definitely a challenge that we see in trying to attract this type of funding for the sector. I think what we can do about it, so one strategy is, of course, you have, growing the fund size over time. So our first fund is 50 million, our second fund is 100, hopefully going towards like 150. So I think, with the next fund, if you go into a 300 to 500 million dollar fund, that theoretically should open doors there as well. But the other aspect is also, we have seen, so there's definitely, we also have received some funding from pension funds, from institutional investors, and what they were able to do is that they have a pool, that they set a pool of funding aside. For example, they set 100 million, 200 million aside, that they say specifically for more impact-driven investments, where they then allow out of it smaller ticket sizes to be done, maybe with a little bit of a lighter process on their internal side. So we see some innovation there, with, I think, more demand from also, just the general consumers also for, I want my money to be also deployed in a more socially responsible way. There's demand, and there's now also institutional investors that respond to that and try to be more innovative and try to find ways to do that. I think it's still in early stages. Luckily now ESG is something everybody is now really working on integrating. So there's still long ways to go, but I think we see some good movement there for sure.
Thank you, Elizabeth. I can say probably for EIB as an investor in funds, we have made small investments. So we have the ability to provide, small investments. Talking about 5 million around this amount, which is not that important, but we were able to provide these small investments for smaller funds, which will have then typically an investment policy that will target tier 2 and tier 3 MFIs. So we have this capacity to go smaller when it's worth and when the impact is expected to be high. So, but it's true that it's not possible for all investors. These small funds remain. There are not many being present on, at least where we are quite present, notably in Africa. But that's something we are trying to do. So not only going in the big funds who are typically investing in the largest participants, but also the smaller ones. Maybe, to follow on the question with regard to coordination among investors with regard to the social performance of the MFIs, I think this is a very good question. And it's true that what we can see, at least with the tier 1 MFI, so the bigger ones, that there is more and more competition among investors, and possibly private investors might be less stringent or strict with regards to the social aspects. Talking for EIB, we are more and more cautious with regards to the social competence of our clients, which we assess at the due diligence and monitor during the life of the loan. So I can talk about ourselves only, but I would say, in a sense, the coordination is made by the fact that we have requirements that we request our clients to respect in this regard, and this is very important for us, and will be more and more important in the future. I would say, yeah, there are certainly some investors who have little interest on the matter, but for most of those we know, their requirements vis-à-vis the social competence of MFIs is quite strict too. But maybe I'm talking, we are more focused on Africa and the let's say what we call the neighboring countries of the EU. Maybe the situation is different in other continents. Maybe Christina, maybe you want to reflect on that too, on this question of the social performance, because at the end of the day, you might be one who has to ensure that this is properly managed. What would you say on this point?
I must admit that from my let's say practical point of view, I'm a bit surprised about the question. Or I was a bit surprised when I read it, but I mean, thinking about it, it's not a surprise anymore. But from my personal experience, I can definitely confirm that there is slightly better competition, especially since this COVID situation started, among investors to place money with us. But this competition was really exclusively focused on commercial, let's say, factors with the various offers that we got, and I'm not aware that there was any discussion about social performance indicators or requirements being, let's say, lower for some investor, and therefore this investor being more attractive. I mean, it didn't occur to me, this idea, to be honest. And maybe just one word on the coordination. Yes, of course, in such cases, coordination can certainly help. However, still, if you have some investors still invested in the respective entity, which has a given set of requirements, then even an additional investor with more relaxed requirements doesn't really, change or shouldn't really change the way of operation of the entity. So I wouldn't be too worried about this, to be honest.
Yeah, maybe I can. Maybe we can add that the SPTF and Cerise are also doing a good work on the matter, which is a work in progress at the moment, because I mean, things are evolving, but they are, I would say, somehow coordinating some answers to this. And I would say this is done at a macro level. On the macro level with specific institutions. Yeah, I think a large number of the investors are socially oriented, and they will not want to reduce their requirements if another investor is let's say more flexible. Of course, we cannot avoid that a non-socially oriented investor has deep pockets and can offer better terms to a specific MFI. But I think indeed it's a good, it's an important point that we need to keep in mind, and all the solutions that you mentioned, Christina, and the fact that we want to support even more vulnerable people will require that we are even more stricter with the social competence and capacity of MFIs. So the more we support vulnerable people, the more this will be needed. So to me, this will only increase the requirements vis-à-vis the social requirements.
If I may add one other aspect to this question, and especially the coordination question. I think 2 years ago or so, there was a panel at European Microfinance Week about coordinating reporting requirements of various investors vis-a-vis the microfinance institutions, and that was definitely not focusing on social performance, but overall reporting requirements, covenants, mostly financial indicators. But at the time, I think there was also, let's say, a very clear common understanding in the discussion group that overall coordination about reporting requirements would be extremely helpful. I mean, again, speaking from the MFI perspective, from an operational point of view, it would make things extremely much easier if there was an alignment. And I think this is a bit, let's say, the similar discussion that can be just extended to cover also this topic.
Thank you, Christina.
Mm.
Please, Elizabeth.
Sure. If I may just add one point to that, I think, we see it very much on the investor side as well. And of course, we also have, all these reporting requirements and try to be more aligned with the co-investors, especially on the financial reporting, what is required. I think on the social reporting, from what's important as well is how to create value also, like by asking, we ask, for example, for a lot of gender disaggregated reporting from our investees. But I think we also try to use it to create more value at the institution. I think that's what often doesn't happen. So we try to get a lot of data, but then we analyze the data, share it back with the management, and try to have a constructive discussion about, look, these are some of the findings that we see in your data. And what we've seen, actually management of MFIs being surprised is sometimes asking, oh, where do you have this from? And we're like, well, you gave us the data, but we're looking at it maybe in a different way and try to have a constructive discussion, and then see how can we help you. For example, seeing your retention rate for women clients or for women employees actually higher than your retention rate for men. So how can you use this to your advantage? And I think that's something that's often a very one-way street of how this data is used. You get all of the data and that's it, and then you report it. But I think trying to create value also from the data, have constructive discussions with the management on the board level, try to support the management by using that data in the right direction is I think also something that maybe as an investor community we are not doing enough.
Thank you. No, indeed, and Patricia has added a further comment. And indeed, of course, certainly there are investors who have no interest in the social angle of the investment, are only looking for return. And this, I think the answer to that is also regulation. I mean, self-regulation is certainly one answer, and I think the people around the table today are very cautious on this. But at some point, and I think Christina, you pointed out this, but I think regulation from a formal regulator should also address this question to ensure that indeed, as you say, the market is driven by purely by investors that are purely interested by the return and nothing else. So on that sense, I believe that regulation is important and should develop to also protect the sector. And regulation means as well the ability to monitor the regulation. So not only put rules and leave them without any attention. You need to control and be tough on the way you control your rules. So and this is the role of obviously the role of the governments and the regulator to address this. I had a question also on the insurance that a comment made to me privately on the decade ago. Microinsurance became a big topic, but has it died down today? I don't know. I must say I have the feeling, maybe I'm wrong, but my personal view when I talked about climate insurance is that the needs are so big and the challenge that we have ahead of us so important that I think microinsurance will be maybe not the solution, but might be one of the solutions that we will need. So it's my own perception. I may be wrong, so I'm happy to be proven that it was wrong. But I do believe this is something that might develop in the future. And maybe 10 years ago we didn't have the tools needed to implement microinsurance. All the digital solutions that we have today are certainly helping in this regard. So I see that we have received another question. So is there any opportunity for conventional small tiny MFI to survive nowadays due to the massive capital investment in the industry and digitalization? That's a very good question too, indeed. Maybe I will address this question to Christina if you want to say something on this topic. But digitalization is a big question. Huh?
Yeah, this digitalization is really the topic, and I think this is really a fair question because obviously the investments that are necessary to, let's say, to keep up to speed at least with certain fintechs that are starting to be a real competition in the area. Also with, let's say, facilities that are already available in let's say, ordinary commercial banks who are working on downscaling, are really significant. And therefore, for a very small entity, I think it might be really difficult to cover all the respective necessary investment. And therefore, I definitely believe that in any case, this needs support from the, let's say, dedicated investor community. And obviously, the smaller you are, the, let's say, the more value you will get from real donor money, and not just a cheap funding, a relatively cheap funding. But even in terms of looking at this whole, let's say, area of economies of scale, it's obviously a question if it's worth developing certain dedicated products, channels, etc., just for one small entity with a very, let's say, limited client group. And I mean, obviously, the next question, what should they do then? Yeah, I think the easiest thing is to try to partner with other players who are having, let's say, an interesting offer that you want to offer for your clients also. And it's just super important there to, I mean, obviously to find the right partner, and not only in terms of the product that is offered, but also let's say, the way of cooperation, and to also make sure that it's not, let's say, some sort of a one-way street where you are just, let's say, yeah, selling your data or the data of your portfolio basically, and at some point your, let's say, input is not needed anymore, and the partner becomes, let's say, the strongest competition, but to really find an entity which is interested in a long-standing, long-term cooperation in this area. So I think it is becoming really, yeah, imperative to find a solution on that question, because the real, let's say, yeah, traditional microfinance approach with yeah, sharing or distributing some flyers in the market and then doing individual loans only with live visits and not having any other offer for the clients, for example, transfers, deposit products, also insurances, as we heard, etc., becomes really more and more difficult.
Thank you. Elisabeth, any comment on this?
I'm happy to just briefly add. I mean, I fully agree with Christina. I think there's definitely challenges, but we do also invest in some smaller, maybe not tiny, but smaller microfinance institutions if we see that they reach a niche market that is often ignored by the bigger players in the market. So we definitely see in some markets there's some that do focus more on the rural agriculture segments that are not being fully served by the bigger players. But definitely, as Christina also mentioned, there's no way around, you know, really going with the developments and investing in digital infrastructure. So what we see there is like partnership approaches are definitely important, and also regulation is so important. So that they're able to work on platforms that are more interoperable. So not everybody builds their own mobile banking platform, because it's definitely, it's not possible for a lot of players. And you don't want it to just congregate in one single player that then dominates the market and can set the prices, and everybody else is crowded out. So there, I think a lot of work is also required on the regulatory aspect to make sure you have platforms that are open for use, where different players can come together. In some of the smaller players, they might have the outlets in some of the rural areas that others don't have, that they can then use as, for example, agents in those rural areas to have that last mile distribution, some of that last mile cash in, cash out that's still needed, even using mobile platforms. So I think that type of partnership approaches are really important. Regulation is important. And yeah, the right set of, as Christina also mentioned, players coming together to support also the smaller players in the field, that I think are very, very important to reach, especially the underserved segment.
Thanks, Elisabeth. I think on this we might close. If there's maybe there's one last question. Yeah. So follow-up information on the macro insurance. So if there's no other question, it's 5 o'clock. So we will close here. I just wanted to thank very much Elizabeth and Christina for being able to join this discussion. I hope it was useful for those who could attend the discussion. If you have any follow-up question, of course, we're happy to answer them separately per email or per telephone. Feel free to reach out. And otherwise, I wish you all a very good end of the day and talk to you soon. Many thanks.